welcome back, you too. So, I know it hasn't been long since I dropped the other video, but I just felt I was obligated to drop this second one based on the fact that I promised you guys a liquidity explanation, the kind of liquidity I choose and why I choose this kind of liquidity, because that's like the fundamental and like the premise to building a system. You understand? So, you guys should just listen attentively, and I hope you have the attention span to watch till the end, because like this video is packed, honestly. The thing is this, right? If I give you 100 strategies or systems that work, right, as long as I give it to the person, to the wrong person, they will still blow account, they'll still fail, they'll still be unprofitable. So understanding fundamentals first before going for war is essential, honestly. I just hope that analogy does something good. Well, yeah. In the course of this video, I'm going to move over to three different images, right? Which is the one you're seeing currently on your screen, and then two other pictures that I downloaded from previous charts. Hmm. So currently, right? I think, should I start from the daily? Maybe we should start from the daily, right? So that you guys can have like a vivid imagination of what I usually look for before I spot out liquidity. But as you can see though, on the daily we are bearish. I'm sure you guys can all see. We had a bearish movement down here, and this was just like a retracement going back up. That's what it looks like on the daily, right? If you don't understand what I'm saying, then we're still gonna learn market structure. So, but from the 4 hour now, we had a shift in market structure above which high, this high, right? And price retraced it down a little bit into this imbalance over here, and then kicked back up. So when it kicked back up, this was last week, right? Monday, Tuesday, Wednesday, Thursday, and Friday. This was last week's trading range from Monday till Friday. We can draw it out using 50%. Monday's low and Friday's high. That's 50% is around here. But let's say Friday hadn't been created yet, right? And this was Friday. This was we're using Wednesday's high, and we want to trade Thursday, right? We are going to be using from the Monday's low to Wednesday's high, and then I'm looking at the 50%. So what can you see resting around this 50%? I'm seeing the new days opening gap, which is quite significant, it's prominent. The new days opening gap, and the liquidity I'm seeing resting close to that area is this liquidity. You can spot it from the 1 hour. It's very clear. So after seeing this kind of liquidity, I move over to my 15-minute time frame to make sure that the liquidity is actually very, very clean. And as you can see, it is. So I don't just look for because as you can see, right, these are all liquidities. But why am I not taking all these liquidities? Because all these liquidities are not really significant. Where does this pull, this momentum, where does it start from? It starts from here. It doesn't start from here. It doesn't start from here. It looks like it's moving from here, but like it originated from here. I don't know if you understand what I'm saying. This is where you originated from. So that's where I'm going to be marking as my liquidity. For instance, now, where do you think this pull, this drawback down originated from? It didn't originate from here. It didn't originate from here. It originated from where? Here. So this would be my liquidity if I was going short. That's like a significant liquidity because as long as he made a new high and as long as he made a new low, the liquidity is valid. But I don't know if this one made a new low though, because it was like just one pull. If you check the 1 hour, it didn't make a new low. So just for educational purposes, that's why I'm like just explaining that. As you can see, this made a new high and we are bullish on the 4 hour. So if we are bullish on the 4 hour, we can see the order flow from the from Monday to Wednesday, you can see we were bullish, right? So I want to be moving bullish, right? So when price came down into this liquidity, all I needed to do was react from it, which is what I did. I reacted from price. So let's take another example. So why do you think I took this trade? This is a I told you I was going to take out the charts from another day. Why do you think I took this trade? I mean, other than the fact that I'm clearly pointing out liquidity over here, but this liquidity here, this low didn't make any new high. As you can see, this low didn't make any new high. So why did I still point it out? As you can see, right, this is Monday. If this is Monday and this is Tuesday, and Monday was the one that retraced down into this low, that means this is Friday. And Friday now was the one that took out this low. The low that where? The low that made a new high. But Friday took it out, moved, didn't create a new high. It was just, if it didn't create a new high, right? This low is something I'm looking for price to return back to because these are two relatively equal lows. I have liquidities resting below here. That's why I pound out this one. Because if this one is taken, then definitely this one is taken as well. And if you can see from low to high, 50% rests around this level. You see, your premium and discount level are one of the most important things you have to learn about. Knowing when to sell and when not to sell, when to buy and when not to buy. You buy where you buy at discounts and you sell where you sell at premium. So if you see me selling below, you see me buying below 50%, it's just me just trying to buy at an institutional level where I know that the big institutions are looking to put their orders in. I don't know if I'm making sense. So I look for this kind of lows or this kind of highs, and then I look for setups inside those what's it called, when price reaches those levels. And then so another important thing you need to understand is when the strategy works. I mean, I've explained this countless times. Give me a minute. So I've mentioned this countless times where I said the kind of setups I like to see are the ones that form after a particular point hasn't been exceeded. For instance, now in NAS, because of I know how many points NAS can move in a week or a month, I try as much as possible to hold a threshold where price should always deliver a certain kind of model, into like my point value. Like, let me explain. Like, when I mean points value, I'm talking about, like, let's say price is trying to move long over here, right? I am not going to take any trade if what I'm risking is exceeding 35%. I won't take any trade there. So that's what I mean by points value. Same thing goes for gold. If I'm trying to take a long here on gold, I'm not taking any trade where the point value exceeds 3.5. Because when it now exceeds that, now my risk to reward gets shrunk, and I have to exceed my target sometimes, and price doesn't reach it. Sometimes it does, sometimes it doesn't. But I won't gamble on those kind of trades because I've seen that nine out of 10 they don't work. So those are the kind of things that I want you guys to put your mind on and like see, okay. I mean, what kind of thing have I understood from price? Like, I've gone back, I've back tested, I've seen how things work, I've understood how price move. Am I a swing trader? Am I a day trader? What kind of markets and what kind of risk am I taking on? Those kind of questions you ask yourself, and then you'll not be able to incorporate some certain things I'm saying into your trading. It's all about finding what you do first, what gets you on, then seeing what works for you as well. Sorry. You can't just take any strategies and say you want to employ it. It doesn't work like that. You first have to find your understanding on price before seeing what works. So the second image I said I was going to show you guys was this was the second one. So this was the second image I said I was going to show you guys. And sorry, I didn't what's it called properly annotate this particular one, but I'm sure you guys can still pick what I'm trying to say. Let's say this was Monday, right? Because sometimes Mondays are the ones that don't have volatility. Or let's say this was Friday, right? Friday closed, no volatility. Monday opened. I don't trade Mondays, and then Tuesday came, right? What can you guys see from this chart right now? Like, can you tell me? Can you see anything significant? I mean, this is a 30-minute time frame. Don't forget, this is a 30-minute time frame. That means this is a significant low because it made a new high, and this is also a significant low because it made a new high. But if I want to draw out where I want to see my liquidity level, I wouldn't use this. I would rather use from here to here, and this would be my liquidity level. Reason being, if I want to draw from here to here, right, I'll have to first calculate how much points market has moved. And if market hasn't really moved so much, then this is just the obvious low price has to come down into. I mean, like, this can be a handful, honestly, but I just want to draw you guys cognizance to the fact that this is how I look at price. There's no other way I look at this. Is just how I look at it. It has like a mixture of technicality and fundamentality like attached to it. Why am I trying to sell there? Because this is just a very good discount level. Do you understand? Like, those are the things I look for, honestly. These are the liquidity. These are how I find liquidity levels. These are like it's nothing big. It's nothing bigger than this. Nothing. Honestly, it's nothing bigger than this. Because as you can see, like every single image I showed you guys today, from the trading view chart to here, they all have like a similarity. And those are the kind of similarities you're meant to be looking for in charts. Those are the kind of similarities you're meant to be having in your model. Every single thing has to be the same. Because when you start imputing external things that doesn't work in your system, now you're breaking the system up like apart. It's not making sense anymore, don't you think? You're doing random things, and if you remember, right, I told you guys once, I said you can make money doing consistent things in a random market, but you can't make money doing random things in a random market. Do you understand what I'm saying? Let me know if it makes sense. You can make money doing consistent things in a random market, but you can't make money doing random things in a random market. So, despite the fact it's a random market, you think you can just ball in. That's why you can easily ball in here and just make millions, and you can easily ball in here and lose millions because you're doing random things. If you put in a consistent approach to this stuff, I risk a certain amount. I look for a certain model. I don't trade a certain, trade. If it goes against a certain point, I'm not good doing anything. Those kind of things. What kind of news do you think your model works best in? I'm giving you guys ultimate juice. You won't see this shit nowhere. Ultimate, like, I'm telling you the truth. This is how it works. This is how it is. It will take you oh my fucking god, it will take you time, I promise you. It will take you time. But time is all you have. It will take you time, but time is all you have. Because I'll tell you this thing, right? It would never happen. Trading will never click the time you want it to click. It would take its own time because whenever you think you've gotten it, you find out you haven't even gotten it. So it's best to just have this mindset of seeing your end goal and just allowing the process take its place, enjoying the process, honestly. I don't know, man. I don't know who this message was for, but like I just felt I had to drop this shit for you guys. It's like me promising you and delivering. I'm a man of my word. I'm a man of my word. anyways. I think that'll be all for now, though. I have to go and charge my system. But yeah, once I talk to you guys next time, please stay safe.